Yeah, we can
Yes,
see
we
it.
can.
Okay. So, all right. So today's is specifically normally the my sessions on weekends. It's about the software, picking up new stocks and other things. But today's is just focus on futures trading only, and how I use our own proprietary indicator, TR indicator, on daily trading of futures. That's what I do. I understand because the entire audience, I think, I believe, is Muslim. But I understand there are some issues among different scholars about being halal or haram, but that's something that I leave people to their own discretion. And we're not going to discuss it right here. But if you are just focused on halal trading, the same system with the same methodology can also be used to trade halal ETF funds on a daily basis. And the question is about that we want an instrument so that we can generate some income on daily basis. For some, it could be $500 per day. For some, it could be $300 per day. For the sake of today's presentation, I have set a limit around $200 to $300, and that's what our target is. Simple as that. So, uh, welcome everybody, and that's my screen. You can see. So, trading micro e-mini futures. Now, we are just targeting micro e-mini futures, not the regular e-mini. And it's more specifically MES or MNQ. MES is for trading the future contracts for S&P 500, the micro one. And MNQ is for micro NASDAQ futures. And it basically trading the market, the way the market moves. And below here, we have the link to my website and our YouTube channel or the email. You can drop me an email. And I believe all of you are, I have 14 participants here, all of you in my customers group as well. Anyway, so moving on. Now, this could be a lengthy presentation because there's a lot of concepts, especially new. I don't know how many of you know these future contracts. They already do. But for some, it's totally new. So it could be a lot of information. I tried to keep it as simple as possible. But believe you me, it's not easy. I've been doing this for more than 10 plus years. So I know that this particular instrument is not that easy to understand. But once you know it, then it can become a daily routine for you. So moving on, the first a disclaimer that this material is for educational purposes only, is not a recommendation to buy or sell any instrument. Trading futures is highly risky and can result in substantial or complete loss of capital. Be aware of that. Leverage magnifies both.
بيقول لك لو استثمرت في سناب 5 سنين أجو $10,000 دلوقتي هيبقى $800.
I'm sorry, who's speaking? Can you put your phone on mute, please? I'm not a registered financial advisor with FINRA or SEC. For financial advice, please consult a registered advisor. Index levels, margin and cost shown are approximate and change constantly. Always verify current figure with your broker. And the key thing is only risk capital you can afford to lose entirely. Never trade with money you need. Objective of today's session is that what we trade, either micro S&P 500 future contract, which is MES, or NASDAQ contract, which is MNQ. And daily target is to achieve a consistent $200 to $300 per day income. And that's it. Let me give you a tip here that don't be greedy. What it means that sometimes it's very easy to generate this $200 to $300 in 10 minutes of time in the morning or five. Then you have the entire day. And then we say, okay, if it's 300, let's make it 500 today. Let's make it 1,000 today. And then we fall into the trap of market. We choose poor location and we lose the sight of our target. Now, consistency matters far more than any single big day. One day, if you make $2,000, but in the very next 2 3 days or in one day you give it all back to market and you turn into negative, that's not being consistent about. Trade quality is that we should not look for more than three to trades per day. It's more than enough. It's take a lot of time, conviction, a lot of your energy, although it looks easy on surface. We should always target a risk to reward ratio. Actually, it's reward to risk ratio, type of mistake here, 2 to 1. so that if we risk $1, we should get a reward of $2 or more. Process is important, profit follow. Now, this one is very important. What it means that we should try, instead of targeting $200 to $300 per day, we should try to find good location on these contracts to get trades of higher reward to risk, 2 to 1 or 3 to 1, rather than focusing on $200 or $300. Because profits will automatically follow if we follow our processes. That's the key. So discipline rule is once the daily target is met, shut the platform down and walk away. The most difficult thing to do. Because if you're doing it full time, the tendency and the addiction will bring you back to the platform because things are moving, bars are moving, and that gives you a lot of attraction. Oh, why should I miss out this trade? Why should I miss out this move? And that is very normal to happen. And that happens all the time. I'm telling you from my personal experience. Then we run into the problem of over trading. Then instead of two, three quality trades, we trade 5, 10, 12 trades a day and give back in 1 hour what took a week to build. So the goal should be to have a good process, repeatable process, not a lucky day. Okay? Agenda, first we will define what are the contract, then cost and sizing, margin, commission, then the preparation, what are the tool setup we have, then our strategy, the indicator we use, long and short entries, and the risk management, very critical. One thing which is not mentioned here is part of risk management is your psychology. And trader psychology is absolutely critical to understand. I'm talking about things like this. Daily target is met, focus on the process, avoid over trading. This is all about trader psychology. And trader psychology, believe you me, plays any more important role than anything else, like tools, indicators, and setups and platform. This is what really matters. If you are not good at controlling your psychology, then maybe this is not for you. And resources from where to go from here. Moving on, what are the micro mini futures? Okay. I don't know how many of you, by the way, you are experienced or have done or tried trading this futures trading. I don't know. And maybe quite a few of you have done this. But let me tell you this that to be consistent is a challenge and it comes with practice and a lot of patience. So, what exactly a future contract, especially when we're talking about index? A future contract is a contract obligates the buyer to purchase or seller to sell an asset at a set price in a set future date. So for an index means S&P 500 or Nasdaq. Settlement is in cash because there is no such company's share. You have to pay, and then accordingly, if you don't get out of that particular day, you will have to pay the value of the entire contract in cash. So the objective is the day trading. So you open a trade and you close the same day. E-mini were launched in 1997, and the reason we like E-mini or micro because of their liquidity volume. On other instrument, normally the volume is lacking, but here you can go and you can see millions of contracts or trades every day. I don't want to go into the details of this thing. Can confuse or take a long time. What happens that there is a full size contract. It's, and that include, for example, 1 point of S&P 500, 1 point, right? 7,700, it moved to 7,100. Means $250. E-mini is one-fifth of that, means $50. What we are targeting is just micro E-mini. This only $5. And very soon they are going to introduce nano E-mini, which will be 1/10 of this. Hopefully, 1/10 of one-fifth means $1 or 50 cents. And why we are heading towards smaller size? Because the market has grown from what S&P 500 used to be, let's say 2000, 10 years ago, 12, 15 years. Right now is 7,700. So the value of 1 point has gone tremendously higher beyond the reach of individual persons. That's why they are introducing smaller and smaller contract. First E-mini in 1997, then micro E-mini in 2019, and anytime you will hear that nano E-minis are available. So those micros are very suitable for people, smaller traders like us who do not have a lot of money to put a bet on it, and they can start using it and they can actually learn it. For example, When this was written, the S&P 500 was 7,600. So one MES contract controls about $38,000 of index exposure. Right now, we're talking about now you cannot buy $38,000 or this is one fifth. What we do, we use leverage. So, but by through leverage, we put a very small amount of money and we get sometime 90 times or 100 times of that money or maybe more than that. People who do crypto forex exchange trading didn't understand that leverage is a two-edged sword. It can give you a good leverage to make good amount of money, and it can also kill your or bust your account quicker than you'd ever think. So micro contract is a thing which you are looking for, made index futures affordable for a small retail account. Hopefully they will have nano as well in the future. They will be more affordable. Okay. Moving on. Who it suits and why? It suits for traders who want an additional source of daily income. Work from home and needs schedule flexibility. Futures are traded almost 23 hours, Sunday evening to Friday. Right now, future market is closed. They will open at 5 p.m. Central or 3 p.m. Pacific time. There are many retired people who want to do it on their part time early in the morning. They don't have a day job, ideal for them. Now, the evening, or also known as the Globex session, are normally not suitable for high liquidity because your main markets are closed. Futures are very tightly tied up to the main indexes, S&P 500 or Nasdaq, and those are closed in the evening session. So though at that time futures move based on news or based on Asian markets or European market, whichever is available, and what their future impact the traders think will be on US stocks. Except that this is a game of probabilities. Losses are part of it. They will always be their losses. You should accept this and you should be prepared to take those. But the key is to make your losses small and make your gain as big as gain. In other words, high reward to risk, 2 to 1 or 3 to 1. No stock market restriction compared to stocks. Previously, there was a patented traders rule of $25,000. I think this has come down to $2,000. There is no rule as such. No optic rule, short selling at some time is restricted. No borrowing shares to short. No interest or borrow fees. A future works in both direction. If market is coming down, you short. If market is going up, you go long. Accounts can be opened through major future traders with just $500, as low as $500. Through $5,000 to $10,000 is far more realistic. Futures also receive 60 to 40 long-term, short-term tax treatment. 60%, but we are focus on the short-term tax treatment. Okay, and there are several not prop firms, prop firms. Again, I'm sorry about the mistakes. Prop firms which offer simulated accounts starting from $49 per month, and they give you access to a simulated account where it's possible to make money. But those systems are designed so that there are so many restrictions so that the people keep on coming back, bust their account, and it's easy to trade. Lose their account with $49 per month once, then again they open another account with $49. And that's how they make money. So leverage is the distraction and the danger. It cuts both ways fast. The realities and risk. I already touched upon those risks. That it's not easy to do, it's hard to learn and harder to do profitably on a consistent basis. Large majority of retail future traders are not profitable and quit within a few years. And the most important thing, psychology and emotional control decide outcomes. And they are hardest part to master. It exposes you. Every day it will expose you in front of mirror and you will tell you market that who you are, how strong you are psychologically. Long sideways consolidation times impatient trading and poor setups. Now, what happens that market normally they are not in a bullish or bearish trend. They are chopping around. And when they chop, there's no clear direction. And this is where traders, because you have a tendency to make some money every day. So you see a small chop going up and down, and then you got trapped into that, and then you get impatient and you start losing money. So leverage, again, I explained this, it can damage your account in minutes. Now, one thing, this is very important. Doing less is more profitable. This is counterintuitive. Unlike other professions, trading requires the skills of being patient enough to sit and take no action, which is counterintuitive to almost every other profession. In every other profession, you work hard, you work more, you put more hours to do and achieve something, correct? And you get better. But here, the key is to realize when the opportunity is and sit patiently to wait for that opportunity to come. In other words, at most of the time, maybe you're doing nothing. And that's the hardest part of it. Because we are already losing money, you are negative, then the tendency of the human psychology that you will try to recover that money and take the revenge trade. And that, unfortunately, is the hardest part. So, doing less is more profitable. That's why initially I mentioned that we are just targeting maximum 3 to 4 trades and maximum this amount. Doing less while being consistent every day. That's what our target is. Okay? So which micro E-mini is to trade? As I mentioned, there are two which are targeting. MES is micro S&P 500. Each S&P 500 point is $5 per contract. And for NASDAQ is $2. Tick size is one fourth of that. So 0.25 means each tick. So for example, S&P could be 7,000.25, and each tick will have a value of $1.25. And correspondingly in NASDAQ, each tick will have $1.50. Okay. Notional values are approximate. Don't pay too attention to this because we are using leverage, so we are not looking at the value of the contract itself. But one micro NASDAQ contract is $57,500 in reality. But we cannot put up that money, so we are using leverage. Okay. Margin and commissions. I hope there are no question at this time. We can take a pause and very quickly answer any questions so far.
Can you go and explain the tick again, Sabri?
Tick is one fourth of the point. Let's say Nasdaq. Okay, let me show you the chart. Where is the chart here? So this is my let's this is 7,771, correct? This is S&P 500. Okay. Each point, 7,000, now the index is 7,764, then 7,7666, so there is 7,7665 in between, correct? So each point consists of four ticks. So you have a value which is not shown here because there will be too many values: 7764.25, 7764.25, 7764.75, then 7765. And each tick values one fourth of the total value. So one point here, let's say from this point to this point, there are 2 points. So this is going to be $10. Each point is $5. So each tick is one fourth of that, means $1.25. Is the smallest measurable value which a contract can give to you. Okay. In other words, I can go and plot ticks here. This is what here are the ticks. You see, 77747. Then you have two ticks here. 774, half a point. Then another half a point. So each half a point is two ticks. But as you can see, it will be too hard uh, to measure if we go around that tick value immediately. It's just a smaller scale of measure. Okay. So going back to our presentation, similarly, NASDAQ each tick is 50 cents. Each point is 4 ticks. Okay, we were here. Margin and commission. Now, as I mentioned, the accounts can be opened as little as $500. If you want to open an account with futures traders, if you have an account with interactive brokers, so the same account will work on futures as well others. But they are specialized future broker who only deal in futures, like Stage 5, which I recommend, and otherwise interactive brokers is one. TradingView is another one. Now, day trading margin when the market is open is much lower than the overnight margin. So if you happen to have a future trade open and you do not close it before the close of the normal trading hours, which is 3 p.m., goes into the evening trading session, then their margin requirement is higher. So maybe a broker, if you have too many positions open, they will force close your positions. because they will say that you don't have enough cash to cover this margin. Micro commission typically well under $1 one per side. What this means that if you buy and sell one contract is MES or one MNQ, there are certain fees that you need to pay to the broker. And that fees, one side means you open, two side means you close that position. So normally for these contract is 62 cents each side. So normally is around $24, $40 per contract to open one contract uh, and then close it. Okay. So moving on, these are your costs that you should be looking at. You have to pay something to TradingView. In order to do live trading, you need to have their minimum essential plan, which is I think for sometimes they offer it $12 per month, but normally it's $15 per month. Then you need to subscribe to the real time CME data for non-professional. For professional, it's $548 per month, but for non-professionals like individual traders who do it for themselves, it's $10 to $20 per month, depending upon your brokerage account and their contract with them. If you have a broker platform like IBKR, now TradingView is your charting platform where my indicator is available. But different brokers, each broker has a different platform. And you can also, by the way, trade it using their own platform. Often is $0 with their own platform. But you can interface or link your interactive broker account with TradingView or other broker account with TradingView supports over 100 of accounts. Then there will be no charge for that. Then as I explained, commissions are around $24 to $50 per contract, both sides. I just explained this to you. Now, there is an interesting alternative available, prop firm. And what prop firms do, they give you an account of $25,000, $50,000, $100,000. So let's say you take an account of $50,000, you open this. And they will say, okay, you do an evaluation. And they open an account somewhere around, sometimes they give a deal of $49, but normally around $100 one time fee. Sometimes it even goes beyond that. So there is always a range. Now, if you go for a $50,000 account, they will give you a profit target of $3,000 to meet with a maximum loss limit of $2,000. And there are some maximum size like 40 contracts, but we are just targeting one or two, for example. So what they are saying, once you make this $3,000 for a $50,000 account, then you will be qualified to have their funded account. Once you have their funded accounts, on that funded accounts, you have to repeat this thing. And then they have their profit rules that if you have five winning days, winning with the minimum limit of some have $150 per day, $200 per day. So let's say in 5 days you make $200 to $1,000. So you can withdraw a certain amount of $1,000. That will be let's maximum 50%. So if you have just $200 per day, so because they are providing this money in a simulated account, and then if you make that money, they will allow you to withdraw that money and that will go to your pocket. But
of course.
sorry. Okay. So before choosing a prop firm, the evaluation fee is a real cost, and most participants never pass. Number one, it's easy to open a $50,000 account with only $100 from $100. A single rule, but they have very tight rules. Each prop firm have their own, and they are designed in a way to make sure that more and more participants fill around these levels. So you need to be careful about the gimmicks or the glitches in their system so that you don't run into excessive losses with the prop account. But a prop account could be a good way to start with very, very little amount, let's say $100, and start doing trading and then learn it at least. Okay? A single rule breach ends the account and pays out carry their own conditions. Treat it as a route to capital, not a shortcut path learning to trade. Otherwise, you put your money in your own trading account with Interactive Broker stage 5. Maybe you can start with $2,000, $3,000, and then you can avoid this prop from thing. But your actual money of $2,000 or $3,000, whatever the account value is, will be at stake. So that's the difference.
So I didn't understand on the previous slide. I didn't understand the breakdown of the fees. So let's say if I was trading with Fidelity or Schwab, then I don't need to pay the shorting fee or the real-time CME data, right? Because I get that automatically to my
No,
brokerage.
no. The CME fees is exchange fees. It will always be there, whether you trade it on Schwab or you trade in Fidelity or Interactive Broker. Because the exchanges, future exchanges, CME, in this case, Chicago Mercantile Exchange, they manage these MES and future contracts, index contracts. So they charge their fees. So those fees are normally passed on to you. Okay, that's one thing. Second thing is your TradingView fees. Now, on each platform may or may not be suitable for the need of futures trading. So, for example, my proprietary system is built around Sierra Chart as well as TradingView. Right now I had made it in the TradingView. So if you want to use that, then you need to link your TradingView with the broker fund. That TradingView, you have to incur this cost, $15 per month. Okay. Now, on top of that, on each contract which you trade, you have to pay this amount to the exchange and some commission to the broker. Broker also want their money, right? So part of it goes to the broker's pocket and part of it goes to the exchange. One is data fee. Whether you do any trading or not, just to get the real-time data, you have to pay this fees. And one is the commission fees on your actual trades. Okay. All right, moving on.
Another question on the same slide, on the right side. Um, I'm not, I think I'm not sure about the nomenclature here regarding the 25, 1500. Are we saying that it's going to be $3,000? Is it per month target or is it flat, no
It's a
time limit?
flat target.
Okay.
Different, each platform could have a different value. This is sample one from Lucid Trading Flex Evaluation. Lucid Trading is the name of the firm. You can go to the lucidtrading.com on their website and they will have these details. And they offer this, and this. Three configuration, $25,000 account, $50,000 account, $100,000 account. And for each, they have the higher the value of the account, the higher the profit target is, and the higher the maximum loss they allow in it. And each should have a different evaluation fees. So this should have a less than $100. This could have 100 around 100. This could have around $150.
And do we need to fund the account with those numbers,
No,
25,
no,
50?
no, 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 not at all. You only pay this fees. That's it. $100, 150 one time. That's it.
Can you explain that again? And I don't think I'm clear on this one again, please. Thank you.
You pay a fee of $100, one-time fee, to open an account with $50,000, which is a simulated account. And then they put you on evaluation and they want you to pass that evaluation if you meet this profit target of $3,000, while allowing you a maximum loss of end of day to $2,000. So let's say you're trading it, but one day or 2 or 3 days you incur $2,000 loss, your account will be closed, period. But slowly, in a matter of maybe 3 days, 4 days, 5 days, 10 days, you make $3,000. All right. Then you pass the evaluation, and then you are qualified for the actual funded account. The funded account, once you make certain level of profit, you can take out that profit, part of that 50% or 60, depending upon the different platforms and different kind of arrangement, and that you can earn your money. Okay. CME stands for CME stands for Chicago Mercantile Exchange. And another question: can I use my Robinhood account to trade options? I'm not sure about Robinhood. You have to check with them because each broker is different. I Interactive Broker, which I use, they have the flexibility, but they are a big broker. I don't think Robinhood is a futures broker, so they may or may not have this. You have to ask your Robinhood guys whether they allow future trading or not. Okay. So moving on, why future markets move? It's simple as that. Why index moves? Future market is just index. S&P 500 futures are S&P 500 and Nasdaq is Nasdaq futures, etc. So futures move on the macro news, like any tweets by Mr. Trump and whatever is happening around the world, which can impact the market. Earnings. So that's why in our trading window, we will have a watch list open for the major stocks, what they are doing. If, for example, on any particular day, all Max 7 stocks are moving, they will definitely move the S&P 500 and Nasdaq 100 accordingly. Both of their future contracts will also move, and futures are more liquid, so they move ahead of the actual market or actual stocks because they are highly liquid. Analyst actions, corporate events, merger approvals, splits, launch product launches, news. So price movement creates volatility and liquidity. And that is exactly what creates opportunity. If there is no volatility, then there will be no price movement, so there will be no opportunity for day traders. A dead range bound market offers very little worth trading. And during, for example, the summertime, normally the volatility is quite low. And right now we are in the summertime. But this day or this year or previous year, they have been actually different from normal day. The volatility is on quite high. Ranges are have become bigger, and that gives you more room to find good trades. Whatever the reasons are, I don't want to go into the detail. Now you focus on the intraday range, then find sensible entries and exits inside it. Tool setup, I have already touched upon that. You need to have a brokerage account, like with Interactive Broker or Stage 5 or futures traders. Then link it with your charting platform. Now, the charting platform I am using is TradingView, and I'm using my own TR indicator to do the day trading. By the way, for people who use it, TR indicator for stock trading, just to give you an that originally this indicator was built for futures, and then I rebuilt it or migrated it to the stocks. You also need a professional platform, and that's why we use TradingView, because that's a professional platform used by millions, not if not millions, hundreds of thousands of traders with a real-time data feed. It's designed for this kind of trading. The actual brokerage provided platform, normally they are not designed for high speed or high speed or quick trading. They are more designed for to buy and sell stocks over a longer period of duration. Expect a monthly data cost and genuine learning curve, which I explained the monthly data cost. I recommend there should be at least two monitors, charts on one and your order entry and market internals on the other. But for the sake of this presentation, because Zoom does not allow to display two monitors at one time, I have squeezed everything on one screen, and that could be difficult to understand. You need to have an internet, obviously. Normal broadband connection is fine. Stability matters far more than raw speed. And you should have a contingency plan for power, internet, or PC failure, including your broker's phone number. What happens that at time when you have a power failure, internet drops, and you have open position, and if it's a big position, you can run into big trouble. You have a contingency plan for it. You need to have that. Pre-market, there is some preparation required, and that means a trading plan that you should identify the what market is doing, what it has been doing for a period of a few days and a week. Is it balancing? Is it in a bullish zone, or is it in a trending bearish or trending bullish? What are the some good support and resistance zones from the prior session? And our system automatically plots it for you. Then you review the overnight action. I know quite a few people who just work in the overnight session. They don't work in the because in the during the day session the ranges are higher. The bar range and the overnight session the ranges are low. Market does not move too quickly. So that suits some people's style. But if you have to be up in the night and do the trading at around 3 p.m. in the central time, that's the time when the Europe market opens around 2, or the China market is open around 8:30 or 9 our time here in Central. So if you do some trading over there, I don't recommend that because I don't want to get be up and running entire night. Mark levels, identify the initial support and resistance zone you actually trade against. And then the assess bias that at that particular time, what the stocks are doing before open, trending, balance, and accordingly what future markets are doing. Okay. Now, to aid you, there is a Top Step live commentary channel. These guys are trading, starting from pre-market areas to the entire market most of the time, because that's a prop firm, by the way, and they want you to be their customer, but it's on YouTube. So if you just go to the YouTube and find, let me do that. In fact, why not? So if we go to the YouTube and we find top step, here is a top step live futures day trading. Right now it's upcoming. So for example, if you just open it on one monitor, and right now obviously it's closed, but they will be live in 20 hours. So August 10 at 7:15 a.m. 7:15 a.m. I'm not sure which is, I think it's Eastern time, 7:15 a.m. And these guys, for example, will be doing a live trading. So that's a good source of learning and understanding what their main objective is to make you a customer and put you on, make you buy their top step prop firm packages, just like one I shared with you. That was from Lucid Trading. Okay, so moving on, so you can keep on watching it for as long as you're trading. But I have been watching them when I do trading, and I'll be honest with you, most of the time I find them, not a good word, but stupid. I mean, I don't know what they do. Maybe their main objective is they're not doing live with their own real money. And their main objective is to look rosy to the people who are watching. But nevertheless, since the live action, so you can find some good leads from there. One question I had, does it use leverages like Forex? Yes, it does use. Without leverage, because the value of the future contract is quite high. It's $57,500, $38,000 value for each micro contract, approximately. So you cannot have without leverage, you cannot buy and sell this thing. Okay. So moving on, the work that decide your day is done before the opening bell. So you should have these kind of things, a kind of a trading plan. And a written one is very good. It should be there. Now we come to our toolkit. That what are our core indicators and what are our levels of air. Now, more indicators are not better because it confuses you. Human mind at one time can only grasp, absorb a limited information at one time. But you should understand what you should have. And from my own experience, these are the four indicators that I use. Rather than having a Bollinger Band and channels and this and that, at times, sometimes you can use that, but Fibonacci levels, everything has some value, but you cannot have everything. That will only confuse the entire thing. Okay. So let's move on to the chart again. Okay, here. I have four charts open here. And this is about micro E-mini. This is MES, future 5. Right now, market is closed, so everything is stopped. This chart here, the first on the right, is on the 5 minute time. So each bar is 5 minutes. Yeah, it's candlestick. And this bar and this, I think, is this a Heikin-Ashi? No, I don't want Heikin-Ashi, I want volume. Okay, on this chart. Okay. This one, second one, the middle one, is the same chart, same contract micro, but on 15 minutes. Why? In the future, in the morning when it opens, I want to trade with 5 minutes or even 2 or 3 minutes because things are fast moving. But I want to also know exactly in the bigger picture what actually is doing. So I want to see a few hours, the 15-minute chart or 30-minute charts perform better and give you kind of a 36,000 feet, or not 36, maybe 21,000 feet view of what market is doing rather than just focusing on a very few bars within a short time period. Now, below here, it's advisable to keep track of what other major markets are doing. So in case you are trading MES or S&P, then I have this NASDAQ futures here, 15 minutes. So I know exactly where NASDAQ. Now, NASDAQ and S&P, normally they go together. It is not possible, majority of time, sometimes it's possible, but for a very limited period. that one market goes up and other goes down. Either one market, if one market is going up, so the other market will start going down again up with it, or it will pull the other one down as well. If both are in alignment going this, then you are fine. Otherwise, it's going to be a chop. Because one market, because what is Nasdaq? A set of 100 stocks. Now, right here, I have a list of most active or most influential stocks like Max 7 and some other on Nasdaq. If majority of them are positive and are going up in one day, like Apple, Microsoft, Meta, Tesla, Netflix is not here, and some of these which are hot these days, then Nasdaq contracts or Nasdaq futures will go up. If majority are going down and they're under pressure, the same thing will happen to Nasdaq, and Nasdaq will drive S&P 500 or vice versa. Because S&P 500 has also the weightage of other stocks besides these tech stocks. These are mostly in tech and the growth area, like banks and insurance. So it behaves a bit differently. But the weightage of semiconductors and tech stock is higher in S&P 500 as well. And in Nasdaq, obviously, this is a tech-heavy index. So the top here, maybe you use it or maybe not, but sometimes it's very useful. At any given point of time, it tells me the New York Stock Exchange tick. What it's telling me that out of, for example, 3,000 stocks in New York Stock Exchange, at that particular point, 314 were up. Previously, it was coming down, minus 500. It means 500 stocks more than it's a net. Okay, cumulative is a net. So the number of stock at that point of time going down was higher than number of stock going up. And right now, for last two ticks, this is 5 minute tick. Number of stocks going up was higher than going down. Now, maybe you don't take a look here, but at times it is important, especially if you want to make instantaneous decisions. That okay, for example, and one particular day, you have this kind of action. You see, all the ticks are in the negative zone, minus 400, minus. What is this telling you? The market is under pressure. And market is under pressure is continuously and most of the time is under zero level. And at this time, it means there are more chances and the market is heading towards downwards. Now compare this with August 4th, maybe, which is Tuesday. Here, most of the time is going up and down. So what I understand it's confusing, but zero level is this. So where the tick is residing most of the time? On the upside, 600, 400. More stocks, this is a net of stocks being traded on the New York Stock Exchange. It means, for example, 3,000 stocks are there and 600 is a net positive. That could mean that you have number of stock positive higher than the number of stocks lower by a net margin of 600. So more stocks are going up at a given point of time. And that gives you a hint, the overall market direction on that particular day at that particular time. So do not spend too much time on that. That if that confuses you, you can eliminate that. But I just have it for my uh, consumption because it gives me a direction. Because normally this is my two screen, not one screen. So I have a much bigger graph. I expand this thing to two screen, two monitors, and then see it almost one monitor, other monitor, and a part of maybe sometimes three monitors. Here I have to show it to you, I have to squeeze it everything on one screen. Okay. Now, any question on this before we move on this chart like this? Okay,
Which chart do you actually use to make a trade? One on the right?
this one.
Okay.
This is a 15-minute chart. This is a 5-minute chart. On the 15-minute chart, this is a Heikin-Ashi chart. Heikin-Ashi chart, if I have a presentation on my YouTube channel, it gives you a better idea that in which at this particular phase, towards which direction the market is moving. So for example, on Friday, market tried to come down. This is 15-minute chart, but after 9, the direction was here. Once it touched this resistance and this resistance, now the overall direction is this. So I use it in combination with my TR indicator. Now, for people who are new, and they don't understand what is the TR indicator. TR indicator is my proprietary indicator. It has 3 stages in the upside, 3 stages in the downside. So for any time, so for example, we move on to August 4th, last week, Tuesday. This is August 6th, and August 6th, August 6th, August 6th. We're still on August 5th now. Okay, this is 5th, this is 4th. Okay, here. Again, I'm struggling to fit everything on one screen. So that's why, okay. So this was my chart starting at what time market opens? 8:30 right here. Now, before market opens, we may change a switch to the screen and we move to our daily and weekly chart. Now this is an index. This is right here, the weekly. Now before the market open, I'm making my trading plan. And the trading plan is telling me that market, we are here at August. This is daily and this is weekly on your right side. So we were here on August 4th, right here at this point of time. That was the time. Now it was telling me the market has reversed. This is the first stage of TR indicator. The market has changed its trend or trying to change its trend. And when the green zone starts, basically the dark green zone is the third stage. It means that now his market has a momentum behind it. Now this is each bar is daily. So before that, I understand that I am in this range. This is a range. Where is the range? Rectangle, which market established starting from May. And now market is trying to stride, came back, failed. Now is following, and then again strongly came and is trying to come out of this range. 1 second, sorry about that. Okay, trying to come out of this range, and here is the range. Okay, and trying to break out while the TR indicator has turned green. So let's say I'm starting my day. I know instead of stuck in this range, it's trying to break out. And then it also calculates at that time where the support and resistance there. So we have support here and 200-day line here for the, this is, we are talking about index, not one particular stock. And this is the bottom zone. And we were right here trying to come out of this range. So the one thing is that and it turned green, we were strong. So my plan is to ride this thing as long as it goes on that particular day. But I will not stop here. I will also take a look at what is happening on the broader term in the weekly chart. And on the week zone as well, we are going to the new highs. And market was coming from, this is the war when it started. April, May, since April, May, 2 months, it was stuck in this. Now, where market is likely to go? If nothing abnormal happens, normally market moves 100% of this trading range. So let's say if you are from 7282 to 7643, so in a few days time, that's around 350 points. So that means we should be looking at around 8,000 levels. If nothing drastically something comes up, which change the market's behavior and move before we have another major pullback. And that's based on our weekly chart. So that's something that gives me a direction of the market on the long-term basis, slightly, because I'm just doing day trading. I wanted that particular day. So that's part of my daily routine. Okay, in the daily, weekly, I take a look in the morning at this. Now we go back to our trading. Go back to here. We were here. And now I want to do trading. I want on the 4th of August. Okay. So let's replay this thing. Now on TradingView, I have a feature that I can replay this entire thing on the 4th of August. I'm sorry about all this mess up, but it's hard for me to squeeze everything on one screen, and that's the real issue. Okay, so we were here on, this is 4th of August, okay, here. So I want, and where were we? So in the morning when we were analyzing, we were here. We know that the market was strong, trying to break out of this region. What was the overnight action for the market? Overnight action was just kind of a going nowhere. But on the 15 minutes chart, on the this is 4th of August. Now I see that for starting from 4:30 in the morning, we are in a continuously uptrend. We were just waiting for the market to open. At 6 p.m., the news come and then the green zone starts. So if I were trading here overnight, this was my first stage TR signal. This is these levels are important. This is VWAP level, weighted average purple line. For stocks is also important for market is and this is previous day close. Once we get out of this area, even at 6:15, I was in a strong trade. I could have taken this trade, but I don't want to because then there's some news come and then I need to wait for the market to open. Okay. Now we wait here. Let me get out of this replay mode first. It's confusing. So we are on the 4th of August. We go back here again. Give me a minute while I scroll back to 4th. I can go directly here as well. I think, yeah, 4th of August. Go to 4th of August. Okay, here we are. So the 4th of August, this is in the night and this is in the morning. Okay. Oh, all right. 5:30 in the morning. Here we go. And this is when the market opens. Market opens here. I'm trading MES. This is trading upside trading going upward. Market open right here and immediately it starts giving me a green zone. What it is telling me that the market's pressure momentum is towards upside. It's a bullish market starting from this point of time. But here we have a resistance lines. This is R1 line and we'll explain it to this. And this is your support lines. When you see when it touched this at 8:20, it came down. Now this is before market opens here. And immediately I see a breakout here with a thicker bar. Now this is,
That is Manu's flight. She's coming in.
I'm sorry, put your phone on mute. Now the market opens and you see the size of the bar and the thickness. As soon as now the thickness of the bar gives me the volume. This is a volume candle. Look at the volume being traded at the market open. This is just prime to market, and this is the market open. So heavy volume coming in. Third stage TR indicator is there to telling me that this is a bullish trend. Heavy volume coming in, and immediately we move past this point. Now, is it offering me a trade? Yes, because this momentum is telling me as long as this TR trade is there, that I can have a trade. Now, the stake are higher. The size of the bar, you see the size of the bar is very small. Here immediately the size of the bar because the more volume is coming in. So it can work both ways. It can fail, it can go in this direction. Chances are there because of strong volume and the green zone that this will go this way. I make an entry at this point, 7663.5. Where should I stop? That's next level. Next level is this thing, which is 7699 or 7000. And you see market tried to came back here. But since market was very strong, so it took a pause for maybe 15-20 minutes and then it moved on. Now, over here, I want to highlight one thing that we have a different levels here. One of the, I want to see that, is that on? Not the volume, I'm sorry. Let me go to the TR indicator setting. This is TR indicator setting. I want to show this EMA 15 period. This blue line has come. This is a 15 period EMA line. when the market is in blue, this green zone, green trend, this 15 period EMAs provides a very good indicator that market is in a strong trend. Market will remain above that. So let's say I entered at 8:30 at 7663.5 as earlier. All I need to make sure that I am following this trend. The first time I saw a red diamond, that's the first attempt to change the trend, but it failed at 11:10. As long as I am above this line or maybe above this line, I'm fine, but this is too much of distance. I will wait the next resistance, and next resistance is also, it, it kept on going. Then it came back to this
मुझे 5 बजे पहुंचना है
blue line, which is 15 period EMA line.
4 बजे उनको छोड़ना
That is our time to rethink how much range it has covered. It is already covered from the daytime from 7657 to 7772 is 117 point in ES feature, which is way above than its average volume. Is it can go up, continue? Well, the market is exceptionally strong. And I'm not looking at only this thing, I am here also looking at the NASDAQ, which is following the same pattern. It opened at this point 8:30 and kept on going. This is a 15-minute chart in one direction. And the CI indicator is guiding me that this has a strong momentum unless this is now a neutral zone. Now we are doing day trading. They should not lose focus. So we should understand that normally I don't keep it for 3 or 4 hours. I just will end here or here. But this was so strong on that day that we just thought, okay, fine. As long as it is above this blue line, we are fine. But now we are getting towards 1:30 in the evening, and look after that what it is trying market starting doing nothing. This is known as chopping around because the day's trading range has been exhausted. So market is not finding enough momentum to go beyond that. It can do that. It's afterward, it's getting towards close at 3 p.m. It's close. So we do not want to wait there. We will close, let's say, our trade at 7765 right here when it touches this blue line. 77665, and we entered at 765. And so 100 points we made on this particular only one contract, let's say, or two contracts. Okay, so we say MES, we went long 7765. No, go back to the chart. What was the range? 7665, this point, and 7765, 100. Okay, so 7665, exit was 7775. So actually 110 points. Okay, 100. Since there were two contracts, so it will be 220 points. If I started with one contract, it will be 110 points. Each contract worth how much? $5. All I did, $550 for one contract. If I had, for MES, normally I have two contracts, $1,100. That was an exceptional day. My target was what? $200 to $300. Let's say if I came out at this point, 7698 or 7770, whole value. I did not wait for all this. I said, okay, I have other things to do in my life. It's only 9:30, 1 hour. I made how much? 700 instead of this value, 700. I even made $350 in 1 hour. And that's all I need. My target was $200 to $300. But again, when it breaks out, I say, okay, now hold on. I'm sorry, I'm jumping the guns. Let's move back. I made an entry here. What is going to be my stop loss? That is important. For S&P 500 contract, it should be $5, but these are higher. So that means 7760. Ideal stop loss should be this level, the breakout point, which is 7658, 7 points. Okay, so the stop loss was 7 points. And one contract, how much I earned? 35 points if I just enter at 7,700. How much is my risk to reward ratio? 35 divided by 7, that's 5. Excellent. I'm targeting how much? 2 to 3. But right now I am at 5. But instead of that, I went on and I moved, let's say I entered here. Or maybe I take one, I sold one contract here and another one at 7765, 7765. Okay. So I have now two trades, one at this and other at I7765. 100 points, 500 point reserve. Stop loss was how much? 7. How much was my risk about today? 14.28. These are the trades I should be looking for and I should be waiting for. My stop loss versus my reward is 5 times or 14 times higher. And that is something, yes, basically it's not taking ownership of the company as shares. No, we are not investing in company directly. We are buying the index share, like you for buying an ETF. Okay? You are buying the future contracts. Now, if you want that question was that is it speculation or not taking ownership? No, it's not taking ownership. You are trading future contracts. Let's be honest about it. Okay. Now come the next day, 5th of August. And for
Before,
that day,
before we
one
go to
contract.
that, can we go to the spreadsheet? I just want to understand what's the net earnings here in this scenario?
Second, what is the net what?
Net earnings.
Result. 175 on this trade, 500 on this trade. Net is total of this, which is 675.
What about the fee structure that we paid?
The fee structure is minimal. It's $24 for this, $24 for this. There are two contracts, right? So that is your fees for $2.48. But your monthly fees is separate. Whether you do trading or not trading, that you have to pay to these guys on monthly basis. $15 per month or $20 for data feed, whatever it is. That is separate. That is not, this is we're talking about the commissions on each trade. Okay? But to be honest, if you get one trade of 175, 500, then you make 10 times more than your monthly fees. It's $1,175. If you go, or 675 in this scenario, you make 20 times more than monthly fees in one day if you catch this kind of move.
Is the quantity equal to one tick, or what
One
is that?
point is 4 ticks.
Okay, got it.
1 point is 4 ticks. So this is 35 point, this is 100 point. Each point consists of 4 ticks. Okay. Now comes the next day. Next day is the 5th of August. And each day is different. We don't know what the day will unfold. Market will go up, market will go down, whatever we'll do, we don't know. But we realize we ended here yesterday. The market, this is previous day, this level is previous day close. So market tends to come back to previous day close level. That's a tendency, especially if it's too extended in one direction. 8:30 again, market did the same thing. And it has been in a bullish trend since the early in the morning, 4 o'clock. Here it first stage triggers, 8:25, you made an entry. But immediately market reverses to this blue line. And you will have to get out of this point because you don't know whether it's going downwards because your stop loss will trigger. So I have a losing trade if I'm just trying to chase this thing. But I know the market has been strong overnight. It is a positive side. So it's probably will find support at this VWAP line or the support line here. Exactly market finds support here. So if you made an entry here, 795, where is it going to be an exit? If market is still strong, then it will surpass this previous high of the day, where it did not. So this is going to be a stop sign, stop area. So you enter it here and you exit here, something around 7795 and 7817. That is $21 move. But hold on. Before that, you made an entry here. Let's see. And we realize that it's coming down, coming up. So we made a stop loss at around how many points? 5 to 7 points, or maybe 6 points. So that's a loss entry. So first thing going long, we made a net entry of how much? Let's say we, as market opens, we tried our luck, 7814.75, and we ended at 7807.7 point loss. So there's a long entry, 7814.75, 7807.74.
But there is on this entry, what you're talking about, right? There is no resistance R1 touching. So why we should take the entry here?
Can
And
you
the
repeat the
first thing,
question?
there is no R1 resistance R1 touching here, right? So why should
R1
we
is
take the
here.
entry?
The reason I'm saying, just like yesterday, now, this is what psychology happened. Good question. What did happen yesterday?
R1 it touched R1, so we took the entry and we made a profit yesterday. But today it touched R1, but still it fall down, right?
I'm following my trend indicator, okay? And what I did not realize, I made a mistake. I'm human, right? So I made a mistake here. What I did not realize that I have been this trend since early 3:50 in the morning. I have already trended this much from yesterday's close. Now it's time to give back some of that. So I said, okay, fine. It's trying. I at the open is break out this area, and I was thinking that it will touch this, but it did not. In fact, it went back and triggered my stop loss. And this is an indication that market is different from yesterday. I incurred a 7 point loss here. And I want to be honest about it that this is a 7 point loss. So this is minus $35. 7 point means one contract minus $35. Not this is absolute value. And I was long. So it is minus $35 loss here. But I want to curtail my loss as quickly as possible. Now, when it comes down to this level and this level, trend does not change very quickly. It will take some time. And since we are coming from a strong trend and a strong market is likely to find support at support level below this level, or even this level. Market found support here. So we rested our entry at 7795.75. And we again, when it came down to previous high or day's high, we entered exit here, which is approximately 21 points. So I made 7 points here, but I made, let's say, 21 points here. So I still earn minus 35 point here, but $105 here on the second trade. Now, should I expect it to go beyond this thing? At this stage, no. Because it had already covered in this trade this much distance, and then it starts struggling. Every time it's trying to come here, struggle, struggle, struggle. It means that it is trying to fill past this beyond. Now, if next time it comes, and this is a diamond indicator, this is diamond, first, second, it's more likely to succeed. In fact, this is the third one. Here, this means this is a chop, but this is telling me that market is pushing downwards. Next time it comes here or here, when this red zone starts, that means that bearish zone momentum has picked up. I can enter when it comes down with this below reverse side, a short here, 7808.5, with my stop loss at around 7817, around 8 points. How much should I target on downside? 21, 4 point. And there it goes. Now in the reverse direction. Previously it stopped here. Now the momentum is, TI indicator is telling me going down. Every time when it will find some support, this support, this support, it will try to come up, fail where? At the VWAP resistance. Now these lines are acting as resistance. And next level. So where should be my target? Next level here, 7765. Where I entered? 7808, 42 points. 42 points here. And that means $210. And that's pretty much it. Because my target, I don't want to be greedy. I already earned, although there was a one trading loss, I kept my loss smaller. I earned $280. Now, can I go beyond? Yes. But at every support, you will find some bounce. How strong or no, how weak is the market? It again failed. But ultimately, it found some support because maybe the Nasdaq found some support and then it started doing things. Then we should be out. I don't think the market after 11 a.m. in the morning will do anything. The size of the bar is being reduced. The trading range has been made, and you see, for the rest of the day, market did not do anything. If you happen to enter trade market here, hey, I pick a point here, then you're not in a real trading range. This is known as classic chop round. That is why in the day trading, after the first 3 or 4 hours, normally the trading ranges disappear. Okay, so that's how you get hold of different kinds of uh, trades on a different day. If you happen to, it's early in the morning, you happen to get trapped and lose, make sure your stop loss is lower, trade size is lower, and then wait for the market to build. Either it will make a trading range, and then this indicator will tell you, okay, it's going downwards and upwards. And then accordingly, you ride that trend. So on the previous day, we were riding this trend, which is a bullish trend. On this trade, we are riding the bearish trend. Now remember that we are in a bullish trend. So bearish trend have a tendency to fail pretty quickly. They will try to fail here or here somewhere. So let's come to our trading on Thursday. 8:30 market open, no, 7:30 market open. It already covered this distance. Most likely it will come down. Here you find at 8 o'clock here, and then the volume come in. It's chopping around, not doing nothing. But here I see if you get trapped here, you will start losing money. But once you follow this thing and you understand that you have a trading this diamond zone here, and then you can from this zone resistance, this is your support. It is plotting it for you. You should not expect because you are coming out of a strong trend. And here again we find at 9:15 a trend reversal. But actually the trading route has been exhausted. So this is a chopping market on Friday, which can, if you just get stuck into this, this is maybe a day which you would like to stay out of the market, especially after Friday. So that is why after the Friday time, you will find market doing nothing, chopping around and doing nothing. If you get into this trap, it's better to close the trade and take rest for the day. So that's what future markets are. I hope I will able to. Now I wanted to stick to the minimum possible loss that I have. That is why I went for only one contract of micro E-mini. Now, if I change to this to MNQ of Nasdaq, this is Nasdaq. Nasdaq move much faster and much quickly. So for example, at 7 o'clock in the morning, when some news come, Nasdaq initiate a break out of this power zone. This is your trading range. If you make an entry, you give 20-point entry to one contract. For example, if you make an entry 29,675, and right now it's 8 o'clock. Nasdaq is coming down. Market is about to open at 8:30. It's time to get out. So if you make an entry 29669.25 and you make an entry 29,800 exit, that is 131 points on Nasdaq. How much is one Nasdaq point? $2. So that's around $200 early in the morning, even before the market opens. Question is the trade need to be, it depends upon the margin you have. If you are a prop with a prop firm account, normally they do not allow your end of day. But as I explained earlier, it can carry over, roll over to the next day. But your margin requirement will increase for the global session. Depending upon how much cash you have in your account, it can go up or go down. Okay, so you can trade NASDAQ contracts or the ES contracts, whichever you like. But you need to have some kind of system which give you an edge that where exactly is the point to trade. And if you happen to, now this is the most difficult part. You made a trade, unfortunately, market did not move you. You lose one trade, you lose second trade. Now, psychologically, you are feeling bad. So you started fighting with market. And you say, no, I want to take my money back. And this is where you will fall into this trap of market. Leave it. Better day will come, which can, unless, but if you have money in your account, then you can trade. Otherwise, you cannot. So that's how this thing works. Now, going back to our presentation, I jump into the market, but I wanted to you. I explained this thing that the two contracts for micro and mini, we want to have this stop loss, ideally 5 points. But in my example, I took a stop loss of 7 points. Accordingly, I have to move my target from 15 to 21. Minimum, you should target something around 2 to 1 reward to risk. Now, challenging days will come your way. For example, there are certain rules that you have to set for the bad days. Decide these now in a calm moment, not in the middle of a losing session. Your target hit, cut position size in half for the rest of the session. So that's where initially, when we were here, not in this example, in the previous example, we make partials. So 175 on the first and 500 on second. How much? 675 total. Two losses in a row, stop. Now your strategy is not working. Something you are not reading market, or you are caught in a chop. Something like this, up, down, stop for a while, close it or do something else, come with a fresh mind and evaluate that this market, what the system is telling you. Are you in this direction or that direction? Or you are fighting the market? No, it will come back. So I will, and then your losses are increasing and increasing. Don't do that. 3 losses in a row, done for the day. Shut the platform down completely. Otherwise, you will have more losses in a row. And in a week time, if you have 3 losing days, then stop for the week. Review every trade taken. That's why you need to have a journal for that. And if your trading account is more than 6% down on the month, then stop for the month, review strategy, then return on the similar. Maybe futures trading is not for you. Okay? Any question before we move on?
Kavli bhai, to buy one contract, we have to pay 7,000, that amount what you are showing in the Excel sheet on the left.
1 second. What about this Excel sheet?
To buy one contract, right? When you say entry at 7665, so we have to pay 7665 to
No,
buy
no,
one
no, no,
contract.
no, 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 not at all. No, 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 no. I'm telling you where. That's why the leverage comes.
Okay.
The entire thing is being paid through the leverage. You are not paying. You have that account with you, and you have maybe $1,000 account. You can buy it with 1,000. The leverage will come. You're not. This is the index value at that point. Entry and exit.
Okay.
Don't get confused with that. This is the value of this particular. Now you are paying. You are just either you are in this from account. Where is that from account? I mentioned it somewhere. Objective here. Where is that from account example? I mentioned it somewhere. I can't believe I cannot find the from account. You are looking at the total value. We are using the leverage here. So we are using the leverage. So we are not paying anything out of it. We are, if you're using the profit from account, then we are just paying $100. But depending upon your stop loss, if you're using your own money, then depending upon your stop loss, if you have $7 point of stop loss, each point is $5 per contract, then you have maximum stop loss level of $35. If you have stop loss level of 10 points, that it means it's $50. Okay? Any more question? Masood bhai, you are also there?
Yeah, I'm right here, listening and trying to understand.
I think we did this presentation once before, 5 years ago, if I recall.
No, it's a good session, you know. It's
All
just a
right. Now,
recall.
Sabi, excuse me, one question. Just actually how we can get this live data for futures or TradingView has any such plan?
okay, TradingView itself is not a broker. TradingView, let's say, I want to check my TradingView, okay, connect another broker. You need to have an account with one of these brokers. Like I have an interactive brokers. The AMP, Webull, yes. Optimus Futures, you need to have an account with one of those. So I have account, for example, with TradeOvate and Interactive Brokers. And there are many others which are not listed here. Now, stage 5 is dormant trading. I have an account with them as well, which I used to work with it. You link your existing account with Interactive Brokers or dormant trading or AMP or Opti Future, and they will provide the live data through the exchange, CME exchange. So they will charge you for that fee. For example, Interactive Brokers will charge you $10-50 per month directly, not TradingView. TradingView is giving you this platform to link your brokerage account to do trading or charting and using their tools. Okay. I believe you were telling me, I think this is Faisal. I'm calling from Saudi Arabia. Appreciate you being here. I think you were telling me you did some trading with the so which brokers you use?
Interactive brokers.
Interactive?
Yes.
So in your case, interactive brokers will charge you maybe $10 per day, per month, I'm sorry, depending upon whether you're professional or not for non-professional. I think it was $10 for trading interactive brokers per month, and they will provide you the real-time data feed, which will appear here because you once you set up your link your account through this trading connection, it will connect to your brokerage account. It will ask you if you go to and then it will say that now the IBKR is having maintenance on Sunday, so you can proceed, and then it will ask you about their password and obviously your account authorization, and then you can use your brokerage account with interactive brokers along with their data feed to trade on TradingView. Okay.
Okay, but actually when I use the mobile app of interactive brokers, they don't give live data. So in order to get live data, I have to link IBK account with TradingView.
No, hold on. You have to subscribe to the live data feeds on trading. Sorry, interactive broker. What do you call it? Portfolio or profile page, because they will let you agree on certain contextual terms from CME. You're saying you need to buy the CME because data is delivered 10 minutes. Yeah, you're right, Mr. Ahmed, that data comes from live data comes from CME exchange, and it has to come either directly to you or through your brokerage. In your case, since you are handling this trading view is not a broker, so you need to have a broker in between, and broker will arrange and have a direct contract. So if the interactive broker is not giving you live data, then you need to go to your profile page, set up your live data contract with them, and then they will start providing you the live data, and they will charge you for per month $10-15, whatever. I think it's $10.
Okay, that's very useful information. I don't didn't know about this, so I will first subscribe and then get live data.
Yeah,
Thank
you
you.
go ahead and check the interactive. I can guide you on that, and it is in your the main profile page, and then you can request the data feed. There is option there, request their data feed and then obviously there are different data feeds. For some, it could be crazy high. For some, it's not. This is a very common. Most of the people trade index futures, so this is a very common and not very expensive. $10-15 max per month.
Okay, thanks.
Okay.
Sabri, trying to
Yes.
understand your strategy. Do you adjust your stop loss while the trade is in action,
Yes, I
or
do.
Okay.
Reason being, these days are my general stop loss used to be 5 points on S&P and 20 on Nasdaq, correct? But what is recently happening because of the increased volatility in the market? That moves too fast. That's why I have gone down to only one contract. Otherwise, it used to be two or three contracts. So these days, for example, this is Nasdaq. I entered here at 720. If I just put 20 points, it's very easy for it to 20, 30 points in one go in a few seconds. Nowadays, Nasdaq at least needs 30 points stop loss. But that means 90 points in your reward direction. If you don't see, for example, if I'm here, do I see a 90 points upward movement? I don't see it. So that's why I should not take a trade at this point. Or if I take a trade this point, then I should limit it to only this level, which is around 20 points, 687, 660 is 27 points even. So I should see, can I make this 27 point towards the reverse stop loss? Then should I have 54 points or 60 plus point over here? And it does actually this level. So for example, when it came down here, 29686, and when it's starting doing this, maybe at 60 points, I need to get off. So 2687, and it's 100 points or more. But this is chopping around, and that can kill your account, your thing in no matter of time. So that's why you need to keep your overall risk very low. In other words, the position size, minimum position size, one contract or two contract. And to answer your question, yes, we change it depending upon how much trading range we see. So one point is that you should have an average trading range for Nasdaq. So for example, this is Nasdaq. If I introduce an indicator here and I see trading range, true range or average true range? Let's say average true range. Oops, this is some author average true range here. So what is Nasdaq's average true range? Based on, I don't know what it is giving me. This is a 14 period. For 14 period, it's giving me 2165. So it means that this is 5 day period. No, hold on. I'm sorry. Go back to the daily weekly. Don't save it. Go to the daily, and I want to see daily on daily chart. What is my Nasdaq's? This is not Nasdaq. This is S&P 5 MES. Okay. Indicators, average true range. Not here on the daily chart. Indicator, average true range. Now my average true range for Nasdaq, sorry, MES, which is 98 points as of now. It means that S&P 500 moves 98 points every day for on average last 14 days, which is quite a higher range. In other words, my stop loss should be widened enough to make it at least 6 or 7 points based on my experience with this range. But when it used to be, how much was? Just in June, it was much higher, 112 points. The market is coming down. At one point is if it is 100, and early June or May is around 83 or 85 points. These days volatility and the ranges are higher. That is why stop loss has to be widened, unfortunately. Okay.
And how long do you keep your trade open? What's the average?
How long? It all depends upon if I meet my target of 2 to 1 or 3 to 1. My target is 3 to 1. Okay, number one, stop loss versus point. And the second is this objective. Where is the objective? If I meet this $200 to $300 per day, then there is no need to be more greedy on that day. Unless you have something like this kind of trend in place. And you know that this is going on and on and on, just like on that particular day, I gave you an example of what example I gave you? And this is 5 minutes on 4th of August. 4th of August. Let's go to the 4th of August. Here. Unless I have, this is NASDAQ on 4th of August. Oh, this is 3rd of August. This is 4th of August. Here. Market was very strong on Tuesday, 4th of August, and I was looking at this volume, but a lot of volume, it broke out well above 15 days. TR indicator giving me this. Just hold on to it. As soon as you pass through your 3 to reward risk ratio, for example, your stop loss was this, and you are here, you already passed your stop loss. Bring your stop loss at this point. So you not, or make it a trailing stop loss. As long as you encounter this kind of thing, that is now the time to get out. So this is flexible or dynamic. That is why future trading is difficult. Because every day is different, and it's time is difficult to find this kind of trade. This was a unique trade. Next day, it was difficult. It started chopping around in the morning, opening strong, but then it took a downturn. Now you need to immediately close it and go into this direction as long as TR indicator is telling you to go into this direction. Okay, it's already an hour, 30 minutes, quite a very long session. I tried to answer questions.
Good question, Shabri. What happens if you don't close the trade by 5 p.m. of that day? Does it roll over to the next day?
It will carry on depending upon how much money you have. Does it cover the margin requirement? Look, you have to have a certain, let's say you have 10 contracts open. So there is certain margin required to keep those positions based on the amount of cash you have in your. And then if you go to the evening, probably the margin will double the requirement. If you have that much money, nothing will happen. Otherwise, the broker will close your trades immediately. Now, in prop firm case, there is no margin requirement because this is a simulated account. And you are working on their funded or evaluation account. So they force you to, if you don't close a trade before day trade in the prop firm, they will close it automatically at the day close. Okay, question. Would you be able to give some example in trading? Oh, that's an important thing before we close. Now, instead of futures, you say that I don't want this future thing. That is speculation and this and that, whatever. You go to, instead of futures, switch it to funds and go to SPY first and then we go to SPUS. Thanks for reminding me. Whatever the future market will be doing, SUS or SPUS will be doing the same thing. This is SPY, S&P 500 Index Fund. Now you need working on cash. Okay, remember you're working on cash. This is 5th of August, this is 4th of August. You see the same pattern, same. Now you buy it, same volume breakout. You buy SPY here, 761.84, and you move on, same kind of purple. It will just replicate the performance of futures. Simple as that. Only issue is that only issue, no, you cannot use a funded account to day trade stocks. No. Funded account is basically they are working on leverage, so they don't day trade on, let you day trade on a stock, as far as I know. It's only available on futures. So this is SPY. You buy it here, and it's a day trade. When it comes to this point, you just like the futures. But you need to pay in cash, whatever the value is $772, right? Something like that, SPY. So if you're trading 10 of them, there's $7,800. You need to have that money in your account. Buy it, sell it here. It's just day trading S&P 500 based on the same set of indicators, on the same set of charts. All you need to do is just change it. Now, my TR indicator, sensing it that it's a future contract or the stock or an ETF, it will slightly change the timing of these signals. because the futures, these are more quick, liquid, so they come earlier than the stocks or ETF. Now, if you want to go to the halal version of SPY, which is SPUS, same set of principles, same thing, nothing. Go to this 4th of August. Problem with SPUS is SPUS is not as liquid as this. You see the pattern is same, but you will see this kind of bars because the amount of volume is very low, unfortunately. And that causes problem. So instead of volume, you go to maybe hollow candles or candles. But even then, you will see this kind of brokerage because the SPUS is not as liquid as SPY. You can still take a bet here and sell it when it comes to this point again. This is 4th of August. If you're targeting SPUS. Because the volume of SPUS either is not available to the trading platform in the live session, number one. That's one thing. Or so it has the platform does not have the entire data to plot it on 15 minutes time interval. Maybe on 15 minutes, 5-minute time interval. Maybe on 15 minutes is better. I don't know. I think 15 minutes is better. You don't see any much breakage here. So that's why for day trading purpose, future contracts are better because they're highly liquid, highly volume, highly established. Millions of contracts are traded every day. In TV, is there any special charting configuration for mini futures? No, the whatever you are looking at is actually my own setup on my own indicator. So that's the charting configuration I have set it up, and I can provide it to all my customers who are subscribed to my service. They want to do it at their own. Change it to MNQ or MES. There we go. You see the way the bars are plotted. Each bar is plotted properly because the information is available in real time for each particular bar, each time frame. That's the difference between futures and SPUS. Okay, if you like this idea and this system and the TR indicator and method, you can, I think we should close it now. We have another presentation by Junaid Bhai, but before that, we were here. Almost all of you are my customers. If you just want to access the day trading indicator, if you're not subscribed to any other product like the $25 my main stock analysis software, then individual basis is $20 per month or $200 per year. But if you're a subscription of this, you can get everything on this package, $395 or $25, and if you already subscribe to one of these package, drop me an email that you are interested, and I can give you a discounted rate for that. Then it will be $16 per month if you are on the monthly package, or if you are on your yearly package, you can combine it with your software on the yearly with $395 per year. Everything included. That includes weekly commentary, that includes TR indicator for TradingView, that includes the complete software. Okay? And you can get a discount. You can scan it if you are new and use this code to subscribe it. Take a screenshot of this presentation sorry, this slide, and you can go directly have this QR code and go there at my website. Any other question that I can answer? No more question? Then I will call it a day. Thank you very much for being here. It's almost an hour and 40 minutes, I guess.
Thank you so much, everybody.
You're welcome. And I know it's not very easy, but this is something new. Not everyone is tuned to do futures trading. And but if you have an edge at system, then you can definitely go and look into it. And let me know if you are interested in having this indicator. But you need to have some kind of system to provide you these levels and these indic signals. Otherwise, you will be trapped. Whether this is the right time, it will go up, go down. You will be trapped in somewhere, and market will take away your money from you. Simple as that. All right. Good luck, guys. Thank you very much for being here. Have a nice day and nice weekend. Bye bye.
Thank you.
Thank you.